Our company is related to financial services, which are CIMB Bank Berhad, Public Bank Berhad, and Maybank. I will talk about the background for each company. The first one is CIMB Bank. The full name of CIMB is Commerce International Merchant Bankers. The headquarters of CIMB is in Kuala Lumpur. CIMB is an indigenous Asian investment bank. There are 1,080 branches of CIMB. The activities of CIMB Group includes investment banking, wholesale banking, and consumer banking. There are around 40,000 employees of CIMB Group. The partners of CIMB Group includes Bank of Tokyo Mitsubishi, Principal Financial Group, and Daewoo Securities. The next one is Public Bank. Public Bank founded in 1966 by Tan Sri Tse Hong Pyo. It is the third largest domestic bank. Some of the activities of Public Bank are investment banking, consumer banking, and commercial banking. There are also services provided by the Public Bank, such as trustee service, wealth management, and share broking. Around 18,651 employees and 386 branches of different countries of Public Bank. In Malaysia, there are 2,000 ATMs. The last one is Maybank. Maybank is one of the largest companies on the Malaysian Bursa. Maybank established in 1996. There are few types of services and products provided by Maybank, which are Islamic banking, offshore banking, investment banking, and commercial banking. Maybank also offers asset management, stockbroking, venture capital, internet banking, trustee service, and insurance. The mission of Maybank is to humanize financial services across the Asia, while the vision is to advancing the Asia's ambition with community.
Banking industry is said facing a risk of growing in 2020 due to the outbreak of pandemic COVID-19. Social distancing and restriction movement ordered by government has slowed down the business activity and disrupting demand supply chain. On the second Prihatin Economic Stimulus Package 2020 by Prime Minister, Bank has extended the payment of loan and financing up to 6 months to support consumer spending. We have highlighted few challenges that faced by the bank in 2020. First, loan expansion will decrease from 3.9% in 2019 to 1 till 2% in 2020. The outbreak has weakened the economy sector and resulted in a contraction in trade activities. Next is the rising in credit ratio. Third is gross impaired loan ratio. It is predicted that the ratio will be worse in 2020, which is from 1.70% to 1.90% compared to 1.56% in January 2020 due to the loan moratorium that introduced in facing the economic crisis. However, the liquidity is still in a healthy condition since Bank Negara Malaysia had lowered the statutory reserve requirement by 50 BPS and the overnight policy rate was also being cut by 25 BPS to support demand of domestic.
This is a CIMB Group Berhad company analysis. For the liquidity ratio, we'll be using the capital adequacy ratio and loan to deposit. The ratio recorded a 12.28% in 2015 and a 16.75% in 2019. Overall, there was an increase in the percentage. However, from 2018 to 2019, there was a decrease by 1.08%. Having that said, CIMB still has a high CRR, making them less likely to become insolvent. Moving on to the loan to deposit, the past 5 years of ratio are always ranging in the 90%, with its highest ratio recorded in 2019 with 94.18%. As with each increasing deposits of CIMB every year, CIMB is funding out to more loans, hence the increase in percentage. Moving on, we'll be discussing on the leverage ratio. The leverage ratio is calculated by using the return on average equity. The ratio has been steadily decreasing from the year 2015 to 2019. The decrease may be attributed to the fact that both the average asset and average equity has increased steadily from the previous years. On to the management efficiency ratio, it will be calculated by using the operating margin and efficiency ratio. A low efficiency ratio is usually better as it indicates lower costs. CIMB has successfully maintained a downward trend from 2015 to 2018. However, in 2019, the efficiency ratio has increased to 55.06%. This may be due to the increase in the non-interest expense. On the other hand, the operating margin has been steadily increasing from 2015 to 2018. However, in the year 2019, the operating margin has dropped by 7.83%. This may be due to the increase in operating expenses over the past year. As such, CIMB can perhaps try to reduce certain miscellaneous costs related to the operation. On to the profitability ratio, it will be calculated using the net interest margin and the return on assets. In terms of the net interest margin, CIMB is performing less than expected. As the analyst shows that for the past 2 years, it has shown a decreasing trend in which it has reached 1.9% in 2019. This is an indication that CIMB may not be investing efficiently. In the case of the ROA has been steadily increasing from 2015 till 2018 with the highest record yet of 1.07%. But the ratio has dropped in 2019 to 0.82%. However, it is important to note since banks are highly leveraged, a 1% ROA may still be profitable. Moving on, the market value will be calculated by using the book value per share and earnings per share. The book value per share of CIMB has an increasing trend over the past 5 years. The largest increase in book value was in 2019, in which it has increased by 0.41. This may be attributed to the increase in common equity from the past year. A higher EPS means that a company is profitable enough to pay out more money to its shareholders. The EPS of CIMB was steadily increasing over the past 4 years. However, last year, it has dropped to 0.47. As a result, CIMB can try to increase its EPS by increasing the net profit.
Here we look at public bank Berhad analysis ratio. Begin with the liquidity ratio of the bank where the capital adequacy ratio shows an increasing trend over the past 5 years. As referred to the table, it was 12.56% in the year 2015 and 17.32% in the year 2019. It seems that the higher the CAR, the higher the degree of protection on depositors' asset. Meanwhile, the loan to deposit ratio of the bank has increased from the year 2015 to 2017, but decreased from the year 2018 to 2019. Even so, the bank has lent over 90% of its depositor in the past 5 years, where it means that the bank is able to cover the loans when facing an economic downturn. Moreover, the leverage ratio of public bank include return on average equity ratio. The ROAE has decreased from the year 2015 to 2019, where the bank has grown its debt more instead of its revenue. Low ROAE means bank create fewer income for each dollar of stockholders' equity. Furthermore, the management efficiency ratio of public bank includes efficiency ratio and operating margin. The efficiency ratio in the year 2015 is 30.54% and in year 2019 is 34.40%. The ratio is unstable over the past 5 years as it encounters ups and downs. However, ratio that is under 50% means that the bank is operating efficiently. Meanwhile, operating margin shows a decreasing trend in overall as in the year of 2015 is 63.3% and in the year 2019 is 59.97%. The bank encountered a stable ratio where the ratio is increased and decreased throughout the years. A lower ratio means that poor management has befallen in the bank. Besides, the profitability ratio of the bank include net interest margin and return on asset. The net interest margin has increased from year 2015 to 2017 but decreased from year 2018 to 2019. However, study shows that a positive ratio for net interest margin means that the bank is operating efficiently. But as compared to the year 2015, the year in 2019 does not perform efficiently. Meanwhile, the return on asset has decreased over the past 5 years. This means that the bank did not fully utilize the asset, hence less efficiency. In addition, the market value of the bank includes book value per share and earnings per share. The book value per share has increased over the past 5 years. This indicates that the bank are able to generate higher profits in order to buy assets or reduce liabilities. hence the increase in the bank's common equity. Meanwhile, the earnings per share has shown an increasing trend over the past 5 years. The EPS measures the bank share price where it determines the bank's future profit. The higher the ratio means the higher the bank value.
For my part, I will talk about the ratio analysis of Malaysian Banking Berhad or Maybank. I will be discuss about liquidity ratio, which are capital adequacy ratio and loan to deposit. For CAR, as can be seen from the diagram, 2015 is the lowest ratio, which is only 17.74%, and after that remain constantly above 19%. As the CAR meet the 10.5% of minimum CAR, means that Maybank able to observe a reasonable level of losses before insolvent occur. Next is leverage ratio. To calculate this ratio, we are using the return on average equity. As can be seen from the chart, the trend has declined for 5 years. This may be due to the fact that average equity has increased from previous year. In other words, lower leverage ratio means that even Maybank does have debt, its operation and sales are generating enough revenue to grow its assets through profit. Next is loan to deposit. The trend has declined markedly over 4 years, started from 2016 until 2019. However, the decline are still below than 100%, indicates that Maybank depends on deposit to make loan with the support from outside borrowing. Having said that, Maybank is able to cover the loan with deposit. Moving to profitability ratio, under return on asset, ratio of 1% and above simply means the asset are well managed, while ratio of 1% and below means resources are not used efficiently. As can be seen from the chart, ROA in 2016 is below 1%. Having said that, Maybank can take initiative to increase their net income or lower the operating costs. As for net interest margin, the positive figure with the average of 1.85% for over 5 years means that Maybank operate efficiency in deposit and funding costs. Moving to the market value, for book value per share, as the ratio is continuously increased about 0.94% for over 5 years, means the share have more liquidation value and the share is more worth. For earning per share, Maybank is consistently stable of average 72% with a difference between 2% until 4% for the 5 years, give meaning that Maybank has created value for its investor as the consistency of EPS will distribute profit consistent too. The last ratio would be efficiency. This ratio consists of efficiency ratio and operating margin. Under efficiency ratio, as the average ratio is below than 50%, means that Maybank has met the maximum optimal of efficiency ratio. Having said that, Maybank earn more than its spending. Next is operating margin. The trend is unstable for the 5 years and decreased by 3.97% in 2019. Thus, lower ratio meaning that Maybank may experience higher fixed costs where the cost cannot be covered by more customer or higher prices. With that, Maybank can take initiative to shortcut their pricing to cater the demand of customer.
Business model of bank is differ from other business. Bank roles is basically providing a financial service to customer. First model is lending. Lending means banks provide loans to customer. Providing loans to customer indicates that the bank is earning interest and this will become the profit for the bank. Next is high leverage. Leverage is the use of debt to undertake an investment. High degree of operating leverage, showing a high level of volatility in the bank's earning. Basically, banks are based on financial service provided to customer, and this result in an increment of leverage. Bank use leverage to finance the asset instead of issuing stock that raise capital, and therefore high leverage can lead to rapid expansion of bank asset. Third model is investment. It is a service whereby the bank create a fund for company or entity. Bank will invest in the company for it to get double or triple amount from its actual investment. However, bank need to be more aware of the stock rate and the environment for them to invest at the right time. Next model is fee. Fee usually being charged from any service that are provided and become profit for bank. Some service that will be charged are processing fee, advising service, and withdrawing money using other banks' automated teller machine. Last model is margin. Net interest margin is how the bank figure out how much the percentage of sale turn into profit. The net interest margin is the difference between interest income from the customer and interest paid to the customer.
Now we would like to do a comparison analysis of the 3 companies in the industry. In terms of the capital adequacy ratio, Maybank has the highest CAR as compared to their competitors in the industry. As such, having a high CAR allows Maybank to be able to have a higher degree of protections towards their customer.
Leverage ratio. As shown in the table, the highest return on average equity (ROAE) is Maybank, while the least percent of ROAE is public bank. This means public bank creates fewer incomes as compared to the CIMB Group and Maybank for each stockholder's equity.
In terms of the loan-to-deposit, Public Bank has a lower loan-to-deposit ratio as compared to CIMB Group and Maybank. It also indicates that Public Bank may have enough liquidity to cover their unforeseen funds such as an economic downturn. However, it is still important to note that the ratios of these three banks is still lower than 100%, which means they are still able to cover their loans with their deposits. On to the management efficiency. Public Bank has the highest operating margin out of their competitors in the industry. This also indicates that Public Bank may earn the trust from both investors and creditors due to them being more stable and profitable. On the other hand, CIMB and Maybank can take measures such as business realignment or improving process costs to try and increase their operating margin. Moreover, it seems that Public Bank also has the lowest efficiency ratio as compared to their competitors in the industry. The maximum optimal of efficiency ratio is 50% or below, which means that both Maybank and Public Bank is in line with the ratio. CIMB did not meet the requirement as the non-interest expense increased in 2019. As a recommendation, CIMB can either try to increase their revenue or decrease their spending to improve the efficiency ratio.
I will continue to discuss about the profitability ratio, specifically for net interest margin (NIM). As shown in the table, Public Bank has the highest NIM compared to CIMB and Maybank. However, the difference in ratio between the other two banks are not far apart, with only 0.01 to 0.05 different. On the other hand, it seems that all three banks have positive figure, indicate that the banks are performing similarly in terms of earning interest for their loan. Next is return on asset (ROA). From the table, we can see that Public Bank has the highest ROA compared to CIMB and Maybank. Having said that, Public Bank is perform better in converting their asset into profit. In contrast to CIMB, the ratio is below 1%, which means CIMB is underperformed. In sum, Public Bank is the best performing company as they are able to efficiently convert their asset into profit as well as receiving interest from the loan. I will continue to discuss about the comparison analysis in terms of market value, specifically for book value per share. Referring to the chart, Public Bank has the highest book value per share of 11.23 compared to CIMB and Maybank. Having mentioned that, stock in Public Bank seem perceived as value and stock price is increased. The list of book value per share is CIMB, indicates that CIMB has the least ability to generate profit to buy more asset and reduce liability. Moving to earning per share, EPS, it is clearly shown in the table that Public Bank's EPS is higher than CIMB and Maybank. Having said that, investor may pay more for Public Bank as the share more value if compared to CIMB and Maybank. To increase the EPS, Maybank and CIMB may increase the net profit or by repurchasing its own stock. In sum, Public Bank is perform better in market value ratio analysis.
In conclusion, Public Bank is the best performing company as all the financial ratios indicate that they're performing well at the best average compared to CIMB Group and Maybank. Maybank is performing as well as Public Bank, but due to being a bigger company in terms of assets, it looks like they are underperforming when in reality they are still doing well. However, CIMB Group seem to be underperforming as their efficiency ratio are not as efficient in converting their assets. Overall, banking industry performing well in terms of financial ratio as the average result is positive. to recommend the banking industry should be vigilant about spending wisely. The banks should also invest in the technology, marketing, automation, and self-service capabilities. The bank also must optimize their legacy investment in branches and traditional systems. This will enable the expenditure in technology allow the banking industry to reduce operating costs. Moreover, with some advancement of technology can put banking sector on higher pedestal to be able to compete in the market, which will lead to higher earning per share for the banks.